There is a skill so rare in finance that most people spend their entire careers never developing it. It is not taught in business school. It will not appear on your brokerage platform. The financial industry is, in fact, structurally designed to prevent you from ever mastering it. That skill is strategic inaction. The ability to do nothing, not passively, not by accident, but with intention, discipline, and complete awareness of what you are choosing not to do. If you work in investing or manage money in any form, subscribe to this channel for a deeper look at how the mind works inside the markets. The entire financial ecosystem profits when you move. Every transaction you make generates fees. Every trade you execute produces commissions. Every portfolio adjustment sends money into the pockets of custodians, brokers, platforms, and advisors. The system is not neutral about your behavior. It is engineered to encourage constant motion. When you log into a brokerage account, you are greeted not with a blank screen, but with a dashboard designed to trigger action. Red and green numbers flash. Percentage changes update in real time. News alerts arrive every few minutes. Charts are displayed in configurations that make patterns appear where none exist. The entire visual language of finance is built to make you feel that something must be done right now. This is not accidental design. It is intentional. The financial industry discovered long ago that active investors generate more revenue than passive ones. A customer who trades once per month is worth far more to a brokerage than a customer who trades once per year. The fee structure reflects this reality. You pay per trade. You pay percentage-based fees on assets under management. You pay for premium data feeds. You pay for faster execution. You pay for research. The cost of inaction is invisible, but the cost of action is itemized and clear. So the entire apparatus of modern finance is optimized to make inaction feel irresponsible and action feel prudent. It is one of the most sophisticated psychological systems ever created. Consider what happens to the investor who commits to touching nothing. Not forever, just for 5 years, just for a defined period. Research shows this investor will likely outperform the average investor by a significant margin. Not because they are smarter, not because they have better stock-picking ability, but because they have removed themselves from the system designed to extract money from their behavior. One famous study tracked investors who had forgotten they owned accounts. They had moved, changed email addresses, lost access to their login credentials. These passive investors, the ones who literally could not trade if they wanted to, outperformed active traders by nearly 2% per year. Over 20 years, that difference becomes enormous. It is not that these forgotten investors were brilliant. It is that they were absent from the machinery that profits from their participation. This is the core insight that the financial industry does not want you to understand. Your inaction is more valuable than most of your actions, but you will never feel it because inaction generates no alerts, no updates, no sense of control. When you do nothing, there is nothing to report. There is no confirmation email. There is no commission statement. There is no new dashboard position. The screen stays blank. Time passes. Years later, you look back and realize that doing nothing was the most profitable decision you ever made. But you cannot feel that happening in real time. This is why strategic inaction is so difficult to train. Your brain is built to detect change and movement. For millions of years, humans survived by noticing when something was happening. The person who sat still and paid attention to nothing got eaten. The person who constantly scanned for movement, for threats, for opportunities, survived and reproduced. Your nervous system is wired to reward motion and to create anxiety around stillness. When you sit with your portfolio unchanged for 3 months, you feel wrong. You feel like you are missing something. You feel like you should be doing something. This feeling is not a signal that you should act. It is a biological artifact. It is your ancient nervous system responding to the modern world. The investors who have mastered strategic inaction have learned to sit with this discomfort without moving. They understand that the feeling is not information, it is noise. Building this ability requires training, just like any other skill. You do not develop a strong core or become a skilled athlete by accident. You build these abilities through deliberate practice and constraint. Strategic inaction is the same. You must practice it deliberately. You must set rules that make inaction easier to maintain. One powerful rule is to establish a review schedule and honor only that schedule. If you decide to review your portfolio quarterly, then you review it quarterly. Not weekly, not when the market drops 5%, not when you read a compelling article about a new opportunity. You review on the date you set. You write down in advance what conditions would trigger a change. If none of those conditions are met, you make no changes. This creates a mental permission structure. You are not avoiding decisions. You are honoring decisions you already made. This is fundamentally different psychologically. Another powerful constraint is to set a minimum holding period. If you decide that you will hold every investment for at least 3 years, and you cannot sell it before 3 years have passed, not because you cannot physically do it, but because you have created a rule. This rule removes thousands of small decisions. On the days when you feel like selling, you do not have the option. You have already decided. This is not limiting, it is freeing. The most successful long-term investors I have observed did not have superior intelligence or superior information access. They had superior decision-making systems. They had designed their financial lives in ways that made the default behavior the correct behavior. They made it harder to act than to sit still. On your platform, you can make trading instant with a single click. They made themselves change the rules to require a waiting period. They made themselves send an email explaining the trade to a trusted advisor before executing it. They made it so that inaction was the path of least resistance. This is not willpower. This is smart system design. When you understand that your entire industry is designed to make you move, you begin to see the financial world differently. You stop interpreting your urge to trade as a sign that you should trade. You start interpreting it as a sign that the system is working. The system wants you to feel that urge. It profits from it. You begin to recognize that the news cycle exists not to inform you, but to generate anxiety that drives action. You notice that market commentary is structured to make you feel like something important is happening right now. You see that financial television is not educational. It is designed to keep you engaged and emotionally stimulated so that you take action. Once you see this, it is hard to unsee it. You begin to notice that every element of the financial ecosystem has been optimized to encourage trading. The interface, the language, the alerts, the social feeds filled with other people's trades. Even the way that gains and losses are displayed to make you feel like you should respond emotionally. It is everywhere. If you found this insight valuable, please like the video so others can find it. When you understand this architecture, you have a choice to make. You can either continue operating inside a system designed to exploit your behavior, or you can opt out. You cannot opt out entirely. You are in the financial system whether you like it or not. But you can opt out of the parts that do not serve you. You can turn off alerts. You can check your portfolio less frequently. You can refuse to watch financial news. You can delete the trading app from your phone. You can set rules and enforce them strictly. These are not losses. These are boundaries. The person who has trained themselves to maintain strategic inaction has become immune to one of the most sophisticated behavioral traps ever created. They have discovered a cheat code. The cheat code is that the financial industry has optimized for the wrong metric. It has optimized for transaction volume and active management. But the metric that actually matters is long-term returns. These are not the same thing. In fact, they are often inversely correlated. The more you trade, the more likely you are to underperform. This is not an opinion. This is documented in the data. Study after study shows that the investors with the lowest turnover outperform the investors with the highest turnover. The investors who trade the least beat the investors who trade the most. Yet the industry continues to encourage more trading because more trading benefits the industry, not the investor. This is the core misalignment that strategic inaction solves. When you commit to inaction, you are not committing to ignoring your portfolio forever. You are committing to a disciplined approach where you make decisions rarely and thoughtfully. You are committing to the idea that most of the time, the correct action is no action. You are committing to building your wealth in a way that does not require constant maintenance and adjustment. This approach flies in the face of modern financial culture. It is not glamorous. There is no CNBC segment about the investor who did nothing and won. There is no book deal. There is no TED Talk. There is no social media following. The person who wins through inaction does not post about their wins. They just sit quietly while their portfolio compounds. This is another advantage of strategic inaction. It is not fashionable, which means it is not crowded. The investors who beat the market tend to be the ones nobody is watching. They are not on social media. They are not talking about their strategy. They are not trying to be right all the time. They are just quietly making good decisions and sticking to them. This invisibility is a feature, not a bug. The attention economy rewards action and novelty. The wealth-building economy rewards patience and discipline. Most people optimize for the wrong metric. They optimize for looking like they are doing something. They optimize for being able to tell a story about their investment process. They optimize for feeling like they are in control. All of these things push them toward action. The investor who optimizes for actual returns has learned to be comfortable being invisible. They have learned to be okay with the fact that their process is boring. They have learned to make peace with the fact that they cannot explain in an interesting way why they are winning. Their only job is to show up, follow their system, and do nothing. Strategic inaction is the rarest financial skill because it is the most counterintuitive. Everything in your environment pushes you toward action. Your biology pushes you toward action. Your ego pushes you toward action. Your desire to feel like you are doing something meaningful pushes you toward action. To maintain inaction in the face of all these forces requires genuine discipline. It requires you to build systems and rules that make inaction the default. It requires you to find meaning in what you do not do. It requires you to measure yourself not by activity, but by results. This is why so few people develop this skill. It is not that it is difficult to understand. It is that it is difficult to execute because it is difficult to maintain. The financial industry understands this. That is why it works so hard to keep you moving. Every dollar you do not trade is a dollar the industry does not profit from. Every year you avoid making a change is a year of fees the industry does not collect. The industry will never teach you strategic inaction. It will never encourage it. It will never design systems to support it.